What's up, guys? This is Mdlalose, your favorite forex trader that will give you free trading tips and free tips on how to invest in altcoins and Bitcoin like a professional. Today's topic, I am going to be teaching you not to trade against the financial institutions. I'm going to be teaching you to trade in line with the banks. Let's get right into it. So, ladies and gents, it's pretty simple, right? When you look at the markets, you need to always follow the number one forex rule or the number one market rule, which is always follow the trend. Yes, how do banks actually try their level best to follow the trend, even though they do actually start the trend and simply wait for pullbacks to get into the trend together in line with the trend. Yes, that's very, very important. So a bank doesn't have a luxury like me and you of just jumping into a position and just taking a position anyway, because they've got big amounts of money. If they do that, it will actually cause the markets to actually rise very fast or to gap or something like that. But I'm actually going to open Zoom it quickly so that I can show you what I am talking about. Yes, let me show you what I'm talking about. So the banks cannot just jump into the markets and just put like 10 billion here, you know. Why? Because if they do that, the market will actually do this, right? And they will actually end up buying at higher prices. So what the banks do is they will simply start a trend like this, right? And now they will focus on the pullbacks to actually get in with the trend. The pullbacks get in with the trend. The pullbacks to get in with the trend. So this is where they usually start looking for buying opportunities on the pullbacks, because they cannot just jump in any way they want with their millions or with their billions, because as I said, that number one, the markets will shoot up. Number two, the markets can gap, right? And then they can actually close here and open up there, and that causes a problem because they'll end up buying at higher prices. So when the banks trade, they need to focus on the number one and the most important thing in any markets. It doesn't really matter whether it's cryptocurrencies, whether it's actually stocks or whatever. You need to follow the trend. So the banks buy on pullback at better prices. Why do you need to buy on pullbacks? Because you are buying at a lower price. So you've actually established the trend. There's a lot of ways to see the trend. You can use a moving average. You can use a simple trend line to actually identify the trend where the markets are going, and you simply look for the markets bouncing on the trend line or bouncing on a moving average. Those are the pullbacks that the banks focus on. So that's very, very important to understand that. So banks target to buy cheaper as well. Where is exactly where the price is cheap? So when the price pulls back, right, it means it drops in value, as indicated there. It means it drops in value, and then when the price drops in value, that's where it actually becomes cheaper to actually start looking for buying opportunities. So right here, right here, right here, right here, those are the pullbacks that I'm talking about. So you establish the trend and you simply look to buy on support areas when the market is going up, and you look to sell on the resistance area or when the markets are going down. You can, you know what, be sophisticated and say you need to buy at supply and demand levels. That's also okay as well, right? So it's very, very important to understand that when the trend is established, it might continue for hours. That's why people blow accounts, because you find that they watch this thing start here, okay? They watch this thing start here and they didn't jump into the markets, and the market keeps on going up and up and up and up and up, but someone doesn't join because, you know what, they're thinking that it will drop, it will drop, it will drop, and then at the end of the day it doesn't drop. It keeps on going up and up and up and up until you blow your account. So it's very, very important when you identify the trend, right? When you identify the trend, you now simply have to look for best buying places, which is your support area, or when you are selling, you need to focus on your resistance area. So another thing that is very important that I want to mention is don't just jump in when the markets have been moving for 6-7 hours and then just buy blindly. No, it doesn't help. So the more the market goes up, the riskier it starts to be in that actual position. Yes, I know some people say, Sunny, but you're contradicting yourself. You're saying we need to buy when the market is going up and we need to sell when the market is going down. It's very, very important to have the right timing. Yes, don't just buy. For example, I mean, you're buying here and then the market drops against you, and then you're like, ah, but what happened? You're buying maybe around here, the market goes up and then it drops against you, then you exit here, only to find that where you exited, the market reverses and goes your direction, and it keeps on going your direction, and you kick yourself because you didn't jump in again after that position traumatized you. It's very, very important to understand that if you are late, wait for a pullback, wait for a market to go to a previous supply or demand area, then you can jump into a trade. That's what I'm saying. So when the market is going up, you must know that it's highly likely to continue to go that way. But for the sake of not getting so much stress from trading, try to time your entries according to your support and resistance areas and actually join the trend. Do not be stubborn. I know a lot of traders are very stubborn, like, no, it's coming back. I'll keep on selling. It's coming back. It's coming back. It's coming back. It's coming back. You keep on adding money until you blow your account. Only when you blow your account, it actually goes down, and then you're like, ah, but I was right. No, you were not right because you were stubborn. You didn't see that the market was in an uptrend, and you kept on holding your short position. Okay, so very, very important. So also another thing that you need to understand, the banks do not buy at the same time. They load their positions bit by bit, because if they buy same time, the markets will shoot up like this, and then they'll end up buying at higher prices, which is actually a problem. Banks do not want to buy at higher prices. Remember, you buy low and sell high, which is the number one rule of trading. You buy low and you sell high. So you can't just be jumping in when the candle is doing this and then you are buying there. Usually when the candle is full, it does a pullback because you bought at a higher price right there, and then the pullback will hurt you. So find that where you start exiting, and then the next candle will start going up, and you'll be like, oh wow, these banks know me, or this broker is trading against me. I used to think that this broker definitely knows me, they are trading against me. No, it's because the market knows how people will actually react. It's a forex psychology. A lot of people will actually buy high instead of buying low, and now you understand, for you don't have to buy high. If the trend, you've established that the trend is up, you need to look at the previous support and resistance areas to join the trend. So wait for the pullback just like a bank, and simple load your position when you get that much needed pullback. So it's very, very important to not load all your position at the same time, and if you want to take maybe 2 or 3 positions, not to load them at the same time. You can load them bit by bit. You know what, maybe load the first position down here, the market goes up, it does a pullback here. For example, to be quite honest, this did qualify as a possible support area. You can clearly see right here, it qualifies as a support area, and then it goes back up. When it pulls back, you know this particular zone is a possible buying zone again because of this particular candle right here. I hope you guys can still see that. And then you keep on identifying levels where you want to keep on adding your position, keep on adding your position to the upside until the market reverses as well. So simple, do not trade against financial institutions, because when the trend is established, you cannot win when you trade against the trend. Trend is always your friend. Make sure you wait for pullbacks. If you've missed a trade, do not worry. Wait for a pullback. Simple, jump in on a pullback. Do not buy when the candle is actually shooting up like this. I mean, sometimes it can shoot up like this, you make money, but most of the time you buy when it's shooting up like this, it will actually pull back against you. Can you see this candle, how it was shooting up? A lot of people were buying here, enjoying, and then that pullback actually hit them. Some of them, they could have blown accounts there. Some of them actually clicked out thinking that it's going back down, but continue to go back up, only to kick themselves and say, wow, but I was right, why did I close that position? Is because you were buying at the wrong time. Identify areas that we say they are good support and resistance areas, and then you simply join the trend on those particular zones or particular levels. So guys, do not forget to check out some of my videos. I did a video on Ethereum where I bought Ethereum at $200, and Ethereum, as I'm speaking to you right now, is $392. I am holding on. I think I will want to cash out at what, $2,000, something like that. That is my target, but I don't know. Markets are markets, that can do whatever. So there's a couple of videos that you can check out on my channel, also on support and on currency strength meter. Make sure that you watch those videos so that you can actually learn more about forex trading. Mdlalose, stay blessed and happy trading.